what do you make of what we've been witnessing for about the last 30 minutes or so?
Well, I think the coverage has been great this morning. Perhaps a little too much hyperventilation for what really is just a snapshot of a great company on a tough day in the market. But I think if we just take 1 minute and step back, if I can, and think about this incredible success story, a company that's worth over $70 billion, created in less than 8 years, that occupies everyday lives from India to Brazil, from Dubai to France to the United States. I just think it's an extraordinary success story for Silicon Valley. Credit goes to Travis and Garrett and Ryan for really moving this down the path, the baton handoff to Dara, to Barney. And frankly, I think everybody's celebrating today. I think everybody at the company, I think early investors, I think the current management team, because frankly, this is a milestone. Everybody knows it's a snapshot. It's important. It's high profile.
Sure.
But the reality is this allows everybody to get back to work. And the only thing that's going to matter 12 months from now, 24 months from now are the numbers. And what nobody's talking about this morning really are the numbers.
There's no sugarcoating, though, breaking price. That's not what you expected.
Well, we'll see where it ends up on the day. I mean, I think it's a tough day, a tough week. I think there were, there's probably some conversation as to whether or not, you wanted to bump this to an easier moment in time.
You think they should have?
I think
You think they should have?
No, not at all. Not at all. Not at all. I think everybody around the table agrees. Let the market clear where it clears. We're buying today because we believe in the long-term story of Uber. And if you don't believe, then sell your shares today. That's what makes a market. And ultimately, the numbers that Dara and Nelson and this incredible team at Uber deliver will determine where the stock goes.
Give me an idea of your personal allocation. We know that you've been an early investor. You've held those shares for 4 years. In a sense, you have two tranches, the early tranche and then the ones that you were allocated today. Give us an idea of what you got and what you're going to do with it.
Yeah, we put in for a sizable allocation. We were allocated less than half of what we put in for, which gives you a sense of the demand, and for the shares. And we're watching price closely and would be adding to our position. And so, we look at this and really are focused on 2020 and 2021 numbers. We think ride sharing on a global basis is getting more rational. Dara laid out targets in the S1 in terms of contribution margin and EBITDA margin. We actually think they get there faster than most people think. We think their moves on Uber Eats on a global basis, which have taken down revenue margins in the short run, is going to lead to even more acceleration on the top line. We think that's an even better business than the ride-sharing business globally. And so when you look at our 2021 numbers, we think there's it's not going to take much in the change of a counter narrative here for this stock to be a double over the course of the next 24 months. But, like I said, that's what makes a market. We're not in it for today. And, I wouldn't be surprised in a more constructive market to see this stock back up around $50.
You keep saying more constructive market. You really are pinning a lot of this today on an unsettled market rather than legitimate questions about profitability and fundamentals and the risk equation, which looms large?
Well, I would just say this. Clearly, the private markets have a different perspective on risk premiums as they relate to companies attacking giant end markets that are currently unprofitable. And so you're seeing a negative arbitrage between late-stage privates and the public markets. I think it's understandable. It's warranted. You can buy Facebook in the public markets today, growing 30%, highly profitable fortress balance sheet, for 11 times EBITDA or less than 20 times earnings, as we discussed last week. So investors in the public market have other options. But I also think that when we look at this on a normalized earnings basis, you can get really excited about this, and it'll take some time, but clearly that's weighing on the markets. Risk premiums in the public markets are lower. They're lower this week than they were last week. And consequently, it's impacting the multiple people are willing to pay for the business today.
Yeah, we've been asking the question almost every day lately, it feels, as to whether there's too much froth in the public market. Is this the clearest sign yet that there is froth, but it's in the private market? The public market is just fine, but this certainly throws a bit of a wrench into valuations in the Valley.
Well, you and I talked about this when you were out on the set last week in Silicon Valley. Clearly, there is a lot of late-stage capital. That late-stage capital has reduced the hurdle rate in terms of people's expectation on late-stage returns. And we've seen this at various points over the course of the past, 5 to 10 years, where, you really have a trade down into the public markets where multiples are simply lower. And, as crossover investors, we pay close attention to both of those things. So none of this surprises us particularly. I think this is a great day for Uber. It's a day of celebration. They get it behind you. It doesn't matter if it closes today at 40, at 42, at 45. I know there's some people at Morgan Stanley who've done a fantastic job here and certainly want it to close above 45. But this is a massive issuance to a globally important business that sets them up for success over the course of the next couple of years and allows everybody to get back to doing what they do.
If you're Airbnb or you're Slack, which we spoke about out in San Francisco as well, and companies like Snowflake, what are you thinking today?
Well, this is the end goal for all companies. All those companies understand that they need to deliver, a set of economics that are compelling to public market investors. I think this is healthy. It keeps people sober about what public market investors are willing to pay. We talked about late-stage capital being a weapon of economic destruction. I don't think it's healthy for companies to refuse to go public because I think the public markets exact a discipline that's healthy for markets, that's healthy for companies. That's why I'm excited that Uber is going public today. And so I think that message is being sent. I think that's a healthy message. Sure, it could cool down some late-stage valuations, but again, these are healthy things for the market, and I think these are the type of things that prevent the bubble rather than examples of a bubble.
It was interesting. I remember after Lyft went public and had all the problems, the sort of prevailing narrative was, it's better for Uber that Lyft went first. And I just wonder if you would agree with that, or now, given what's happened with Uber, you say it's not good, that maybe Uber wishes it went first. How do you think they think about that today? How do you answer that question?
The game theory on that, I think, is really a short-term pricing question. It's the voting machine, not the weighing machine. And I don't think it really makes that big a difference at the end of the day. May have made a difference if both of these companies went public 2 years ago. Because I think it may have made the last 2 years a little bit more rational in terms of how the businesses grew, in terms of how the discounting occurred. But we are where we are. And today, I think the fact that both of these companies are public, you've heard the public comments out of Lyft. You've heard the public comments now from Dara and Nelson in terms of how they're building the business. And I think you're going to see that rationality in pricing, that rationality in terms of how they grow the business reflected in the numbers, which is why I have said that we're more confident, apparently, than consensus, that we're going to get to these targets which Dara and Nelson have laid out, perhaps sooner than people think. And when we get there, I think we're going to have a top-line growth rate that is perhaps faster than people think.